Inflation is getting out of control. Last year, we were told inflation wasn't going to happen. Now we are being told it's transitory. But people don't understand inflation. And so we're going to walk through exactly how it works, why it's important, what it means for you, and why you literally are making less money today than you were making a decade ago. Up until the end of 2019, we had been in a decade-long bull market. We had seen stocks explode upwards. Most assets had continued to rise. And people felt like they were geniuses because all of the assets in their portfolio were going up. But we started to see lots and lots of warning signs, inverted yield curves, tons of CEOs leaving their jobs, gyrations in the repo markets, etc., which are just signs of the end or near the end of some sort of bull market. Nobody knows what it's going to end. Nobody knew what was going to create the end. But there were signs that we were getting close to the end. And then COVID happened. And COVID made the world economy, the US economy, screech to a halt. The velocity of money, the amount of commerce that was happening completely fell off a cliff. The government forced people to go sit at home. And when they did that and the velocity of money went near zero, people got scared. And in March 2020, there was a liquidity crisis. And that liquidity crisis ended up leading to one of the greatest sell-offs in assets in the last decade. And so what is a liquidity crisis? It simply means that people are uncertain. They're fearful of the future. They don't know what's going to happen. It seems like things are really bad. The government's making me sit at home. I can't go to my job. There's 6 million people or more a week for multiple weeks filing for first-time unemployment claims. Stuff is messed up around the world. What do? Well, I have assets. So I look around my portfolio and I say to myself, I want cash. Cash is safe. Let me get US dollars. I look at my stocks. I can sell them. I sell them. There's gold. I have it. I can sell it. I sell it. Bitcoin. I have it. I can sell it. I sell it. Commodities. I have them. I can sell it. I sell it. Everything gets sold off and people run for dollars. The dollar becomes stronger. It becomes more sought while those asset prices sold off. When this happens, the US government, politicians, and the Federal Reserve, the Treasury, etc., they have a decision. They can simply allow the free market to play out. They can say, we are not going to intervene in markets. Or they can do what they did, which is they can intervene in the market. Now, the US economy and the global economy is like a drug addict. We now are at a situation where the economy is dependent on monetary stimulus. We cannot operate the economy without having constant intervention. The politicians, the Federal Reserve, etc., has completely banned market corrections and outlawed bear markets. And what I mean by that is that every time we start to see any sort of bear market or market correction, like in March of 2020, they step in and they inject massive liquidity into the market. And so over the last 12 to 18 months, the US economy has seen more than $5 trillion injected into it. Trillions and trillions more dollars globally. All that means is that they created money. They found ways to take liquidity or cash and inject it into the market. They did this by giving extra boost to people on unemployment. They did this by giving risk-free loans to tons and tons of businesses. They found every possible way, whether it was an exotic method or an elementary method, to inject liquidity into the economy. The government was here to save us. But what happens is that the economy eventually opened. People started to go back to work. People started to go back outside. They're now going to concerts. They're going to the movie theaters. They're going out to eat at restaurants. But all of that monetary stimulus that got created, that got thrown into the economy, is now causing a devaluation of the dollar. The dollar is worth less today than it was a year ago. What does that mean? It simply means that if you have $1 a year ago versus today, that dollar buys you less goods. The cost of things in your life are going up, whether it's gas, construction materials, food, or anything else. The cost is going up because the dollar is worth less. And so that is why they said, don't worry, inflation isn't going to be a big deal. Now they're saying it's transitory. Oh, we are only seeing a transitory amount of inflation. Inflation is the measurement of change over the last year, right? But the problem is that as we're seeing prices being hiked up, Tyson is a $30 billion food distribution company. In Q1 of 2021 of this year, They reported the average cost or the average price of an item that they sell, they increased 7.5%. If you wanted to buy a product from Tyson Foods, the average price increase that you saw was 7.5% Q1. The cost of gasoline in many places is over $5. The cost of houses have exploded. Not all of this is due to inflation. Some of it is due to disruptions in supply chains, housing shortages, etc. But at the end of the day, what we found is that majority of Americans feel like they cannot get ahead. I'm going to read you some statistics as to how bad the financial education system or environment is today in America. 66% of American families don't have savings that are equivalent to 6 weeks of expenses. 78% of adults live paycheck to paycheck. Almost 80% of the population lives paycheck to paycheck. 80% of young people couldn't answer majority of the financial literacy questions on a test accurately. 54% of millennials are concerned about their student loan debt. Student loan debt in this country is over $1.5 trillion now. And less than 20% of adults, less than 1 in every 5, feel confident about their savings habits. We have a problem. And at the same time that we have made an absolute mockery of markets by manipulating them and injecting liquidity into them, all of these young people started to pay attention. They started to realize you cannot save your way to wealth anymore in this country. They have destroyed the ability to save. Saving is for losers. That is the hard truth. You were probably told by your parents or your grandparents, save, spend less than you make. And some of that is true. You should spend less than you make. You should make sure you get out of debt, but you cannot save your way to wealth anymore. And the reason is because the dollar today is worth less than it used to be. And what you find is that here is the key difference between wealthy people and those that are not wealthy. The wealthy people know how to profit from inflation. They know how to benefit. And so in the same time that we saw millions and millions and millions of Americans around the country going to the unemployment line, we also saw massive wealth creation for those that held investable assets. The stock market is up over 35% over the last 12 months. The top 55% of Americans have investments. They hold investable assets. The bottom 45% of Americans hold no investable assets. That's the difference. That is the wealth inequality gap. Is if you live paycheck to paycheck and you save, you hold no investments and you simply put your money in dollars, you will be worse off in the future than you are today. If you spend less than you make and you take some of the money and you put it into investments, I don't care where you invest it, and you hold it for long periods of time, and you're a halfway intelligent person in terms of where you put that money, you will be better off in the future than you are today because the US dollar is guaranteed to lose value. The devaluation of the dollar is done in a way systematically. It is not a bug of the system. It is a feature. It is done in a way that will either punish you or reward you. And you have to know one simple fact is get out of dollars. That is the whole secret. You should have enough money so that you have some sort of rainy day fund, 3 to 6 months of expenses, and then you have to invest. The only way to protect your wealth in the US economy today is you have to invest. And so when you start to look at, well, what are the other problems contributing to this? We're going to pull up a chart here in a second that shows the actual minimum wage in America. And what you're going to find is that minimum wage was higher in 1968 than it is today. And so when you start to look at this, we'll do this chart here first. The minimum wage in America is $7.25. This minimum wage in unadjusted terms, meaning not accounting for inflation, looks that it's like the highest it's ever been. In 2009, we went to a $7.25 minimum wage. It looks like it's higher than it's ever been. But in terms of inflated dollars, it is actually lower than it was in the 60s, 70s, and 80s. So what does that mean? It means that from 2009 to 2021, anyone on minimum wage has been paid the exact same amount, $7.25 an hour. But even though the dollar has been completely destroyed during that decade, they're still paid $7.25. They make less money today than they made a decade ago. On top of that, we've got another chart that actually shows 1968, and we're going to show exactly what has happened since that time, where it was the highest minimum wage in inflation-adjusted dollars. Now, the whole key to this is understanding that your salary is not going to make you rich. When you look at this, here's the real value of minimum wage. You can see in February of 1968, the inflation-adjusted minimum wage was $10.54. Today, in 2019 term dollars, that's the latest chart that we could find, $7.25. In July of 2009, $7.25 would be the equivalent of $8.70 today, right? So literally, people who get paid a minimum wage of $7.25 make less money today than they did a decade ago. For a decade, they've been paid less and less money. Now, there are a lot of companies and states that say, you know what? We should pay people more than $7.25. What you find is there's plenty of companies. We have a whole list of them, of all these companies that pay, let's say, $15 an hour. Chipotle, Target, Best Buy, Amazon, Facebook, Google, etc. Bank of America pays $20 an hour. Costco, $16 an hour, right? But they do not adjust this on a year-to-year basis. So in the last 12 months, even though we've printed 20% or more of all dollars in circulation, there has been no adjustment to the minimum wage. And so people are getting paid less today than they were even a year ago. This is the cause of wealth inequality in our country, is that people literally year after year after year get paid less and less money. Now, what does that mean in terms of the cost of goods? When you start to look at the inflation change from May 2020 to May 2021, food on average up 2.2% in 1 year, 2.2%. Used cars and trucks are up 29.7%. Car insurance is up almost 17%. Clothes and apparel up 5.6%. And airfare is up 25%. Now, things like airfare are not up because of inflation 25%. They're up because there was a massive drop in demand because of the pandemic. And now that people are returning, they're kind of normalizing some of it. But things like food are absolutely up because of inflation. And so what we have to remember about inflation is that inflation is not experienced equally across a society. The richest people in the world not only benefit from inflation, they got so damn rich over the last 12 months because they had investments. The investments all went up. Bitcoin went up, stocks went up, commodities went up, everything went up. They love inflation. Why do rich people love inflation? Because they're not holding the currency. They're holding assets that are denominated in the currency. And so rich people love inflation because it makes them richer. The rich get richer and the poor get poor. But the bottom 20 to 40% of people in an economy, majority of their spending is in inflationary goods. Food, gas, housing, that makes up majority of the money they spend on a month-to-month basis. And those have been skyrocketing. And so they feel inflation the most. And so what's happened over the last 12 months is that the most vulnerable people financially in our society have been punished. They've been punished because they go to work every day. They work their asses off. They get paid the same amount, regardless of what's happening in the macro economy. They get paid an hourly wage. And then they go home and they try their best to get out of debt, spend less than they make, and simply save for a rainy day so that they can continue to build what everybody in the world wants, which is simply a better life for them and their family.